Hey, everybody. Welcome to Market Kickoff. I almost said at the buzzer, Jay. I honest to honestly almost said that. Uh, just again, special thanks to Jay for bailing me out of a pickle because I still can't seem to get the gadgetry working. But we're here together. We've had a pretty interesting week and weekend. In terms of news, the markets look to open a little bit shallow, um, but not too bad. The the Topstep team has got our market kickoff levels up for us already. Jay, what are you thinking about this week ahead? What's your eye on?
So as always, Amory, my eye is on the equities. Looking at the way we kind of ended the week last week, um, the Nasdaq looked a little heavy to end the week last week. We did get a little
Yep.
bit of a reversal pattern. We kind of traded back into some of the news candles that we had, and we'll take a look when we get into the charts. But just looking to see if we do find some higher time frame buyers in these markets. I think right now what we're kind of seeing is a little bit of a maybe some profit taking. Hogue and I have been talking on the opening call about the reluctant way these markets are making all time highs. We didn't see the
Mm.
Nasdaq make an all time
Yep.
high on Friday, but the S&P did. So just seeing whether or not we actually attract those new buyers. The S&P is kind of testing this 6,500 level. The Nasdaq. Uh, pull back the last 3 days. We're in an uptrend, but it's a cautious uptrend. So it's not a blind buy market right now for me. So it's really been buy the dip opportunities.
For sure. If we take a look at the volume profile, look at how skinny it is for the last 3 days.
Yeah.
I
Yeah.
mean, it'll shoot out over the top and then come right back in. Um, and I think that is always a space of consolidation in general where the traders go, okay, let's see if it can break out. And then they watch for price pattern to hold. And if it doesn't, they're like, all right, here we go back to the range. All right, let's see if we can break it down. And the traders failed the breakdown. So they have a failed breakdown and failed breakout. And at the end of the day, if we compressed 3 days of candlesticks into one, we would have a candlestick that's got a low down here at this 64.53 ish, a high at this 6509, and then the open and close of the candlesticks are going to be somewhere around this volume point of control. And for me, that always signals to me, listen, you could have a range break, but you could also stay in the space. So the order of the day is to have small size. um, so I would love, as you're my beloved guest, I would love for you to pick the instrument that you feel you're going to trade. Now, I heard you talk about gold a bunch, but I'd like for you to pick the instrument you are going to trade this week. And I'd love to pick your brain a little bit. And I see I've got a lot of hivers here. And so, welcome, my hivers. What I want to do is ask some questions relative to how we set up trades in the hives and sort of pick your brain through that. So I
Okay.
would listen to one way of approaching the market, and then, we can sort of calibrate together. So,
So yeah, let's focus on the Nasdaq. Let's
all
focus on the
right.
Nasdaq. You want me to pull up my Nasdaq chart?
Yeah, absolutely.
All
Absolutely. Would
right. So
love
we
to see
got
your nest.
Nasdaq charts up here, and I can either walk you through my process, or like you said, I think you asked the Hive specific amount of questions or specific type of questions. So
Yeah, you walk me through the process and then I'll probe you.
awesome. All right. So first thing I'm going to do to start the week, it is Sunday, going into the week, and we'll do this during the opening call as well. I will look at the daily. The daily first, a couple of things I have on my screen: the 20, 50, and 200 moving average. 200 is the white line, 50 is purple, and the gold one here is the 20. These are saying uptrend, clear uptrend that we've been in. And then the first thing I'm going to do is look at any significant price action candles. So we have this one here, which was August 12th on the daily. What I'm looking at really quick is we rejected up at the highs a couple of times, so no buyers above that high. And on Friday, we traded to 50% of this, which was a target if we did not find any buyers up above the highs, right? So this 50% area is going to be significant for me, 23,775. I actually took a long off of this level on
Mm-hmm.
Friday for a pretty nice bounce. From there, I'll look at the first candle of the month. We're really, far from there, but that's just the highest volume we've had in a long time. So I'm looking at that area. That might come into play sometime later in the week if we get this selling. So from here, I'll go down to a 30-minute chart, and I'm just looking at, the high from that August 12th candle on the daily. Again, 23,960 is that zone, 23,775. And then my thought process is if we see any selling below 23,775, what is that downside target? It's going to be 23,590s. But we need to see not only price trade below this range, I want to see volume trade below that range as well, so I can trust the move, right? If no volume trades below that move, but price does, I'm probably not going to trust it as much and look for a reversion back to where volume is trading. Um,
So
see
let's
something
let's
here.
probe
Hold
a
on one
couple of those
second.
questions while you're in the midst of that.
Mm-hmm.
The first is you saw the daily candle that printed the highs, and there was fairly solid rejection and then a failure to recapture. I like looking at that. I like looking at that on all kinds of time frames, as a matter of fact, right? That's always some sort of significant event, especially if we're looking at 15-minute, 30-minute, 1 hour candlesticks, and you see that happen, it's pretty much going to retrace a part of that candlestick. So when you say significant candles, it's going to fall into the category of, please interrupt me if I'm wrong. It's going to fall into the category of um, inability to recover above or break below, right? So it'll either be support on the bottom or resistance on the top. That would be the number one, correct?
Just
I don't know if it's you or me.
three,
I
you should
can't
be able to hear
hear.
me.
Yeah, I hear you now.
Okay.
Um, my question was, I did not hear the answer though. Is the answer yes?
Yeah. So when we
Okay.
have significant price action, and I'm looking at significant price action as a candle that doesn't have much overlap, right? So if we look at this daily candle, it was the
Okay.
daily candle that made the all-time high at that time. There's not a lot of
Hmm.
overlap. Since we printed this candle, we haven't traded in the lower 50% of it. And now we are, right? We are accepting price back inside this range, right? So I'm looking at this is an imbalance. We had a ton of buying here. Are these buyers who created this move, are they looking for price to continue higher, or were these buyers who were getting out of shorts and needed to buy at this point, right? If they're initiative buyers like Hogue talks about, we should see them defending some of these prices. If they're not, then they're not buyers who actually care for price to continue to go higher. And in that case, I'm looking for price to trade lower.
Okay. Very, very good. All right. So, this big candlestick down here that you have circled, that you say, hey, that's the highest volume event that you're staring down. Um, yeah, that's another category for a candlestick of relevance, correct?
Correct. Correct. Yeah.
Okay.
If we can sell below this one that we're trading in right now, I'm looking at that as the target, right? So 23,
The
340.
top of it,
Correct. The
the
top,
open of it, the close of it, the
the
top
the
of it.
the top of it, right? And then same thing, if we start to accept in the top of that candle, if we see a price acceptance, which we have candle closes inside of it, then I'm looking for 50% as a target, and then the other end of the range as the ultimate target for there,
Okay,
right?
can I show you a magic trick?
Absolutely.
You ready? All right, you see that great big volume candlestick that you highlighted?
This one here.
Yes, do a Fibonacci expansion and yes, that was my little That was my little magic trick right up there. That kind of one-to-one flow, when we've got very big volume, we really have a tendency to see those rotations. And so in my mind, you know, all the futures look a little bit like they're a little bit heavy tonight. I don't know. I don't know whether they will be or not, but my thought would be if we get a shot for a bounce that immediately begins to fail, in our first 30 minutes or whatever, I think we get ourselves a pretty nice short that comes back to the base of your beautiful blue candlestick there, which happens to be half the size of the range of that initial high volume candlestick that you highlighted. So I do love that. And the reason that I'm highlighting that for the folks that might be in the hive is that this focus on very high volume areas, you're going to see action at those ones, one and a halves, twos, and so on and so forth. You'll notice that one and a half level, all Jay did was he clicked clone to his first candle formation right there. He just clicked clone and put it on top of the move so you could see that 2x. A lot of us don't like drawings all over our charts, but these kinds of drawings are very, very important. And it's my thought that the NAS is going to be weak enough to retrace. If you had a momentum indicator on there, you would also see that momentum is incredibly divergent. Is that an RSI that you've got?
That's an ATR.
ATR. Okay. So you can really see a fair bit of divergence as this price action moves up from its last form. Let's pop to my chart for a sec. Here's what I'm talking about. So I have a really simple one because I wanted to pick something easy everybody's got, right? It's a MACD, right? And so notice one of the big things about the importance of looking for technical divergence is the following. Here is this big spike high, and it comes when momentum is very flat to low, right? And so as it fades and makes a brand new high, this area of momentum it's rising, but it's still sitting in the space where testing that moving average down there at 23,595 seems fairly legitimate to me. And that's the bottom of the same box that you are looking at initially. Now, would you take a short at the break of that, or would you wait for a failed retest?
Which price are we looking at?
Okay, so let's take a look. Your and my candlesticks are almost inverse to each other, so
Okay,
that's a little bit weird. But um, my up candles are white, my blue candles are down.
got you.
Are Yeah, and so your blue candles are up, and
Yep.
your yellow candles are down, right?
Mm.
So this is your up candle. If it comes down in a sweep to this area, my thought would be buyers are going to come in first, but then they're going to have some trouble getting back up over the range. So if you had to pick a region to sort of look for a setup, 23,576 for the first pass bounce, you think? Or what are you looking at?
So for me, and what I've really been trying to focus on, Anne Marie, is just identifying the flow of the market and seeing
Mhm.
what happens when we get to certain levels, right? So
Okay.
for right now, that 50% I had of that daily candle, which was at 775, what I'd be looking at is what is volume saying when we hit this level, right? And just looking for a reversal pattern there. So if we trade to the lower extreme of that candle, right near those 557s or 575s, I believe you said, and volume is
Mhm.
significantly pushing the market to the downside, my job is just to get
Mhm.
into the flow, right? If
Okay.
I can. Now, in doing that, we're coming into a level where where we have potential demand, right? So I have to ask myself when I'm taking a day trade, is there enough room in this trade for me to still take it or not, right? For where I think a potential target might be. Um, but I've really been trying to focus on, and I've realized for myself when I say, hey, this is a level that should be a long, this is a level that should be a short, it almost anchors me to a bias for the day, and then I can't pay attention to real time
Right.
information. So I've really been trying to, at least in the the most recent time, trying to focus on real time information, and then using those levels to determine how the market's responding when we get there, if and when we get there.
Okay, that makes good sense. That makes good sense. Um, I would like to short this, and
Okay.
so I'm going to look at a Fibonacci here, and I am going to look at the high volume candle, this one at 9:30 on Friday,
Okay.
9:30 Eastern time. And I I actually think that right around this edge where it's dancing right now is the actual short.
Yeah, I could see
And
that.
so, yeah. And so, what I want to do, I want to give it a little bit of room, but I think that that's a fair spot for the chart to have a little bit of trouble right there at that 50% marker. Now, the question is this: I still think it's a short, but I could come up into this area that support. I see support all the way up there. And so I think it'll wiggle around that zone, but potentially stay within the range here. So I'm going to leave that one and see if it'll come down into what was settlement. I believe,
Settlement in the Nasdaq was
yeah,
23,804.
23,804. All right, we'll give it a go. See how it goes right there. My thought is always, what I'm trying to do is get away from the technical indicators. And of course, here, full disclosure, folks, I am breaking the rule that says wait for the reversal pattern. And so you'd really want to slip to that 5 minute and watch it stop making a new high, right? Ideally, if you're not jumping into the trade. So this looks like this looks like the space that we are about to get clogged around in. So um sideways, but I think they'll try to push the traders out into the space. All right, let's talk about the ES.
Take a look.
What do you have you noticed a difference between you talked about it actually when we first came on together. You said, "Hey, I noticed that the ES and the NQ are not moving at the same kind of speed. It looks like
Right.
the NQ is a little bit weaker." Is that
Yes.
is that what I heard you say? Yeah.
Yeah. 100%.
So, do you have a thought process around that in terms of saying, "Hey, what do I want to um, what do I want to do I want to potentially uh, step on the NQ just a little bit harder from a short perspective, or are you just going to trade these individually? What is your thought about, hey, I look at the ES and the NQ, and when this one is doing this and that one is doing that, I
Yeah.
sort of, what is your thought around that?
I try to look at them separately because we do
Me too.
sometimes see them move separately. I think more often than not, with the four major equity markets that we have, right, we'll see the Dow and the Russell do whatever they want, and the S&P and the Nasdaq usually try to move in tandem. But right now,
Yeah.
if we pull up my chart really quick, that same candle that we marked out in the S&P, which was this August 12th daily candle. Sorry, we marked it out in the Nasdaq. The Nasdaq traded down to 50% of it. The S&P
Mm-hmm.
is holding that high, right? So
Yeah.
you know if I'm looking for a leader or a laggard, maybe the S&P is leading us to the upside. It did make an all-time high on Friday. We have that major
Mm-hmm.
6,500 level there, but all this
Mhm.
is telling me is that for now, this looks stronger. We could see that change Monday morning, right? We could hear, we could see some tech
Right.
headlines come out, and then all of a sudden the Nasdaq is the leader and leading us higher. So I do try to, trade them separately, look at them separately. Um, but I'm just, if there is a divergence and I see a short playing out, I may just defer to the Nasdaq because it is the weaker one, right? So that short may
Right.
play out a little bit
Yep.
better in the
Yep.
Nasdaq than it does in the S&P.
Yeah. Agreed. And also the real I think the real sweet spot that traders talk about a lot, traders that do very well, that sweet spot that they see is the sweet spot that shows when all of the indices are moving in the same direction, then you can say, okay, I can add to my position or I can hold my position into a lower level.
Yeah, I agree with you.
So I think that's the real takeaway there, folks. For those of you that like to look at all the indices, you're looking at a blazing green light if they're all moving down together or all moving up together. And if they're not, you know, then you're like, yeah, maybe I just do one or two of these things rather than, loading the boat somewhere. So I wanted to look at Bitcoin next.
Yeah, pull your charts
And
up.
so yeah, let me make sure that I've got the highest candlestick formation mapped out here. Yep. All right, so I'm going to give this a go. See if I can get 80.
Yeah, you're selling the S&P as well?
Yes, I've got a limit order at 64.87. What I want to do is look at Bitcoin because it's been doing some really interesting things. And so here's something super interesting. When I measure the ES for high volume candlesticks, I see a lot of convergence coming back to price and that sort of thing. If I use the 30-minute on micro Bitcoin, doesn't work as well. Actually, if I use it in the NQ, it doesn't work as well. The hourly works really well in this micro Bitcoin space. So it's pretty ugly. Right, it does have a little bit of positive divergence. It's come all the way back to the high volume candlestick. Take a look at this. This is the high volume candlestick of, let me unlock this because it's not at the right level. Look at how the support holds. This is the highest volume candlestick into the close of the day, 3 o'clock on August the 7th.
Yeah.
And we came right into the floor of that on Friday. And we're now bouncing up into a space where we could see a move back up into this region, but they're probably going to be sellers here at the first pass in my mind, simply because trend is down to flat and momentum is upward, but it's also in fairly negative territory. So I'm expecting to see a short there. But if you want to use these formations, those folks that are watching, I just go to the largest candlesticks that I can see in the recent days. If you're trading Bitcoin, you use an hourly candlestick formation and try to measure out those biggest ranges that you're seeing. And notice it's trying to get into the 8 a.m. This is super weird time for Bitcoin. 8 a.m. It must have been some kind of news event, but it held the floor and for almost that entire day, plus all of Friday, just about. It's there. Now it's trying to get up into that box. If it can't, my thought is the next one it's headed to is somewhere around, 113,000. But it is trying to lift. It is in the middle of the value area from several days past. If we give that a run and we look for the last 3 days or so, we can see it's almost right in the middle of that value area range. And so, you know, again, I'm looking for another short up at the 120,000 area. So we'll see how that goes. Moving on with that one, if I go to oil and I start staring those down, it's the 4-hour candlestick formations that tell me what's going on, because once oil gets to a resistant level, it immediately begins to rotate. And so we can just see this constant rotation down. Here's something very interesting about the oil contracts. They are in backwardation. And what backwardation means is that the forward contracts are much cheaper than the contracts right now. That's pretty interesting in general. Yeah, it's pretty interesting in general. If you go out and buy that contract that is way in the future, and you're going to have to end up, if you execute on that, I mean, you're going to have storage and whatever issues, but backwardation is not very typical, especially as we move into hurricane season. So something's afoot. And I think it might have to do with what they think the global economy is doing, but it remains to be seen. It really remains to be seen. Do you stare down macro news at all?
Not so much. I'm aware of it. I think I'm aware of it more now being on Topstep TV. You know, uh, the big numbers, right? The planned economic calendar. I'll pay attention to those just because they have the potential to move the markets. If we have something like a NFP or CPI coming out, that'll help me kind of dictate, or I don't want to say guess, but determine what I think the market has the
Yeah,
potential to do.
estimate. That's what
Estimate.
we do.
Yeah,
We
yeah.
estimate.
It helps me estimate what the market has the potential to do on any given day, right? If we're 2 days before a PPI print, I may not be looking for breakout moves because the market's not looking for breakout moves, right? But outside of that, the fundamental news on a day-to-day basis, I don't pay too much attention to, just because I,
Mhm.
I feel like, again, it starts to anchor me to a direction in the market. And uh,
Gotcha.
I've even, just recently, I on the opening call with Hogue on Thursday,
Mhm.
spoke about a pretty great short trade that the market, potentially could present. But I also, right after that, and I, go back, rewatch the tape. Right after that, I said, "But these are buy the dip opportunity. These are buy the dip markets. So I'm looking for an opportunity to buy." If I would have just paid attention to the short signals that the market was giving me, great
I
day.
know.
But
That's so
anchored to
hard.
that buy the dip, mentality is great for longer term investing or anything like that. But day trading here, right? We're day trading these top step accounts. So it really is just, hey, what is the market presenting to you now? And it did turn out to be a great buy the dip opportunity. The buy just happened on Friday instead of Thursday. So uh,
Yeah.
same thing with fundamental
Yeah.
news. I'll pay attention to it because it kind of sets the table for the market. But then I still have to trade the market that's, we still got to trade the market that's in front of us.
Yeah, for sure. Absolutely. And like I tell the folks a- at the Hive all the time, I'd love to talk to you about how your lunatics are going, but I tell everybody in there, listen, chances are you already have all the skills you need.
Yep.
It's about the application of it. It's about personal accountability and self-control and consistency of action. And that really, you go, oh yeah, it's those three. And you're like, again, that's like E equals MC squared. Sounds simple, but we have no idea how to personally say, okay, I know it's my personal accountability because I'm not holding myself directly to X, Y, or Z. What does that actually mean? How can I change that? What do I need to do? And those sorts of things are really, you just have to dig deep. I mean, as coaches, you and I both know that when we're on stage being stared down and going through executions, our feet are to the fire because
Oh yeah.
we'll get roasted like marshmallows you know, if we're taking a dumb trade. So it
Yeah.
makes us really focus. But, a lot of times we don't have people looking over our shoulder, and
Of
very
course.
often that's an important thing. How are your lunatics going?
They're going well. They're going well. I think this week we're going to be getting everybody into their VIP accounts. So we hopefully so. Fingers crossed. But we've been just I had everyone type up what their A+ trade setup is. They sent those
Oh,
over to me, so I
nice.
reviewed a couple of those. And the one thing I think that was missing from everyone's plan was risk management. So I had them all go back, review it, and add some
Ah,
type of risk management um, plan into those setups. And then what we're going to focus on
yeah,
is taking those setups. We've done a couple of sessions.
yeah,
I think we had three sessions together last week. One of them, I just kind of turned on my screens and showed them my process and how I trade, how to
awesome.
manage trades and things like that. I think it went over well. Excited to work with the group to start.
Yeah, they really are
Yeah,
engaged. We just got such a great group. A lot of people have been trading a bunch, and they understand the flow of things, and really most of them know, hey, I just got to get a good rhythm. I know what to do. I can see what the market is doing. I just got to get myself into a rhythm that I follow over and over again. And that's really, it's a hard thing. Getting up every day and going to the gym, it's a hard thing.
not fun
You
at all.
get to love it if you keep doing it over and over again. But when you first start, you're like, oh my gosh, I want to take a nap or whatever,
Yeah,
right? Um, and so it's habits are super hard to break, They're super hard to break, but it really is the reason that we stay stuck. We stay stuck because we know we have to change, but we don't. And that's hard.
so it
I
is.
mean,
I am seeing there was a trader in the chat that was saying there were some orders on the NASDAQ order book up at 850. I'm not seeing them up there, but I am seeing a bid, 405 contracts bid at 23,815. We've been seeing some size trade on the books recently
yeah, yeah.
in the
In
equities.
both directions.
Yep, yeah, in both directions. In the 900s, that 23,900 area, it was like 900 to 922. There was so much volume that traded there on Friday, and that's where we sold off from. So just kind of paying
Uh-huh.
attention to this general zone. There's a lot of a lot of business being done here. Uh,
For sure.
it's
And you can see that they're arguing. This is a
yeah,
very important level. No matter what ends up happening during the course of the day, we know this 23,850 is a zone people are ready to battle in. They're ready to go, nope, that's expensive and up, or nope, that's a great buy. And they are just fighting at the levels, which I think is very interesting. Let's see how the ES is doing. We've got some earnings this week that are coming up. Of course, well, no, Nvidia's not even this week. I think Nvidia is next week.
make
I
everyone wait.
think it's next.
They make everyone
Yeah,
wait. It's the 27th.
yeah, yeah. So
Yeah.
it'll be, a hot minute before they let out. I heard a very interesting story. They were up on the hill. Some people were saying that all their lobbyists were out trying to, drum up whatever. And then somebody put out a rumor that said they were going to sell their chip at a 15% discount to China
Huh.
because of the tariffs. So China could get it at um, a competitive rate. And I thought to myself, whoa, I hope that's not true, because I don't think the administration is going to take too kindly
No.
to that. Yeah, so things might get a little punchy over the next couple of weeks. And it's oil is going to be super interesting in the long haul. Does anybody have any questions about what they want to stare down?
We got a question from who was this? Amid. Why did oil price fall? What are you seeing on that oil chart, Emery? I see, and Amit, I'm going to be honest with you, I'm okay saying I don't know. Um, there may be a fundamental reason. I know fundamentally the news in oil has been extremely bearish. for prices, right? Just with increased supplies. Uh, but why did it fall? My answer is going to
Here's
be there were more sellers than buyers. But what do you
yeah.
say, Anne Marie?
Here's the thing. Nobody knows why.
Right.
We can surmise,
Yep.
right? We can surmise what might be the problem, but nobody knows why. So, my thought is always the following: when you stare down oil and you're thinking about, all right, well, we know what the news is. The news is that the Alaska summit went well, that, China's not going to be, punished for buying Russian oil and blah, 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 blah. So, for me, always goes the same. I look for the highest volume candlestick over the prior days. Like I said, the 4 hour formations seem to work better for me trading oil. And so I will look at that and I will say, okay, there's my highest volume candlestick. Look at it. Just like Jay's picture in the NQ, the largest volume candlestick gave us a square here, and you do a 1 to 1. The top is a 2. That's what the Fibonacci tells you. And look at where it's bouncing off of, that 50% range. So, whether we want to believe it or not, we traders that live because we have to eat what we catch, and I've been one of those traders for a really long time, we're essentially simpletons. And I'm just telling you like it is.
I agree.
We're simpletons. We're gonna look for the halfway mark and we'll go, let's give that a shot, right? I mean, right? Jen?
Yeah,
So
100%. We don't know
yeah,
anything, right? I think I saw someone say
yeah,
earlier, you know, something about speculation. That's exactly what we are in these markets.
exactly,
We're speculators,
exactly.
right? And we're speculators who manage
100%.
risk. And sometimes you speculate and the market agrees. Sometimes you speculate and the market doesn't agree. But if anyone tells you that they know exactly where these markets are going, they're probably lying to you.
Liar.
They're probably lying to you.
Liar. Yeah. Because you don't. So what you can say is, all right, I know these traders are simpletons. So what are they going to go after? They're going to look for the big volume candle. And okay, she's saying it's the 4 hour. So let's just take her word for it for today until I go check it out for myself. Take a look at where this candlestick opens at the top of the last high volume 4 hour event. Now, why did I choose that one and not this one?
Higher
Because
volume.
this one is higher. Right.
That
Again,
simple.
simple Simon, right? I'm a simple Simon. And listen, I used to try to make things complicated. I just wrapped myself around the axle. So you go simple, and then when the simple gets formed, you start putting edges around that simplicity that firms up execution. One of the things that I notice when traders talk about their trading plans, they'll say, and then I'm gonna kinda, if it feels, and you can tell that they want to leave it squishy because of how price can move up and around the sport area, but that's not where you leave things squishy. You leave things squishy as you're rotating down and you are very near your edges of support and resistance for your trade. And then you go, okay, I'm going to give it about 5, 6 ticks right there just so that I don't get blown out. But everything ought to rotate around volume because, as Coach Jack and Hogue and so many others say, prices will go to where the volume is. And
Yep.
that is relative over a period of time. I have noticed that prices, let's say you see orders flat. You ever see orders on the bid or on the ask flashing way above or way below price?
Yeah.
Often I have noticed by tracking what I'm seeing, I have noticed that unless there's other volume amplifying the potential move into that area, that it will never get filled. It'll just sit there all day. But if volume piles in closer and closer, you know that it's going to try and move into that area. But if you see a one lot that's got 800 and something, don't bet the farm on, hey, it's going that way. Make sure trend tells you whether it's got the opportunity to go that way. Because listen, if I had the ability, going to be totally transparent here, if I have the ability to flash 1,000 contracts in one direction or another because I thought I could influence price, I'm going to do it. Why? Because I'm here to make money and I want to get in at support and out at resistance or out at resistance and in at support. I'm going to use the opportunities to go, hey, I bet you they run after that. And then, I'm going to get out before that edge and pull my bid, right? Now, some people will go, that's insidious. Uh,
Was capitalism.
you're entitled to your opinion,
In
right?
some people's opinions,
My
right?
thought is, yeah, people do that every day.
Right.
You can watch them do it.
Hey, zero
I
sum
mean,
game
they do the
memory.
rug pull all the time. Absolutely. Absolutely. So use the tools that are there for you. And right now, we can't sling thousands of contracts, but we can look at where everybody else was slinging thousands of contracts, right? I mean, we can look at this volume candlestick on Thursday and see that they had 39,000 contracts go at that level, but this one over here had almost twice as many, right? Or two-thirds as many. And so this is the region where they said, all right, let's go to battle. And if you've gone to battle and you've dug your heels in, you know where the traders are going to start arguing. All right, I'll give it my halfway spot. And if it doesn't, I'll hit the bid there. And if I can't raise the price, I'm getting out of the trade. And so we can see those sorts of things happening real time. I don't want to come off as some kind of dastardly person. I'm just trying to say, you people play these games. So
Yeah,
just realize they're playing them.
absolutely. Let's take a look at if we can. I'm gonna switch over to my charts really quick. Let's take a look at gold. Um, Take a look at gold on the
Yeah,
daily.
let's
Got some
do it.
traders asking about gold. So gold right now, clearly we've been in balance for 120 days in
Oh
gold,
my word.
where
Check it out.
it's been presenting a ton of great opportunity to trade. But for a very long time since we made that all-time high, we have not been very directional in gold. So right now, kind of what I'm
No.
seeing is we are leaving the middle of this range, that 3,400 area, kind of leaving it.
Mm-hmm.
I'm looking at a couple of different candles here. Let's take a look at this one on the daily. Significant price action again brought us back under these moving averages. We rejected 50% of it. We closed outside of it, and now the low of it is acting as a resistance. These 3390s. So I'm looking to see whether or not we trade through this candle here, right? Where this one on the first was NFP day. Hogue and I for it seems like 2 weeks have been talking about us trading back to 50% of this candle. We finally did it sometime last week. So now the question is this 33.75 level for me. Do we start to see price acceptance below it? If so, then we're looking at the lower extreme of that candle, which would fit what gold has been doing over the past 120 days. Right? We have this range. We've been trading upper extreme of the range, lower extreme, upper extreme, lower extreme. We are
Yeah.
seeing some higher lows here every time we get down to the low. So I am conscious of that
Mm-hmm.
as well, where we might not break. Um, but I'm looking for gold to kind of, just continue this pattern until it breaks.
Yep.
Go down to,
Yep.
go ahead, Emery.
No, I would just said yep.
Okay. If we go down to a shorter time frame, looking at a half an hour now, that 33.75 level. Now, how do I trade this? Right, 33.75. Mark that level out, and it's a zone. It's not exact. So going into today's price action, What I'm looking at is this first half an hour candle. And as you know, for gold, we see the volume pick up. Usually, this first 2 hours of the Globex session are pretty quiet, unless we have like some catalyst or something that moves the market. But when that volume starts to come in for the Asia session around 8 p.m., 9 p.m. Eastern time, uh, I attach VWAP to everything. Right now, it's a flat line, so it's telling me if I'm going to trade it like a range bound market, right? If we trade down to these 70s, look for the bounce. But as that volume starts to trade for the Asia session, if we test the 75s and that volume is trading below it, right? Not just price, but that VWAP as well, then I'm looking to get into that flow of the market because it tells me that sellers are aggressive and gaining some traction in these markets. But yeah, that 33.75 area. And then to the upside, uh, if we see buying above 85, 3,400 would be the target. Just
Yeah.
because that's been a number we got
Yeah.
stuck around so
Same.
many times.
Yeah, sure. And it's, really close to the volume point of control for the near term since about April,
Yeah, yeah.
right? The volume point of control shows us right there. So if we do the measured move with the Fibonacci from the highest volume candle of recent days and we extend down, we can see that it appears that the price action could go to 33.47 all the way down to, 33.20, and it puts us right back in this range. What we do know is of late, if we've come down below these levels, once we bounce and we get inside of the range, we usually go from the bottom of the range to the top of the range. So it'll be super interesting to see if it follows the same sort of sticky pattern because, the moving average is just bleh, right?
The only thing I can tell from moving averages, especially on the higher time frame, is that we are in balance on a higher time frame,
Yeah.
right? And
Yeah.
anytime we're trading near them, we could see it in the price action, right? Look at those daily candles that are kind of overlapping
Oh,
the moving average.
I know.
The ranges start to contract. We're seeing
Yeah.
$20 ranges in gold, but when we get away from them, then we start to see those ranges expand a little bit, right? That's when we get the $90
Yeah.
ranges, the $50 ranges.
Yeah.
So been
Yeah.
presenting great
It would be
opportunity.
nice to have it. Yeah, exactly.
Yeah.
Yeah, it would be great opportunity if it gets there in the near term. And seasonality hasn't worked out tremendously well. We have seen a little bit of sideways, one day up, one day down, one day up, one day down, one day up, one day down. We are seeing that in general, but it's sort of sitting still. It really feels like, they're waiting for some kind of shoe to drop. And if it never comes, the market's going to continually grind to all-time highs again and to get more. So the bottom line for the trader, listen, as intraday traders, we're forcing ourselves to trade in the middle of the sticky bits, right? We usually, if we're lucky and we have some days and they give us massive trend opportunities, then that's phenomenal. But in general, we're trying to catch some kind of profit between one sticky bit and another. So when you're sitting in a space like this, the best thing to do is just manage your risk. And if you don't have to trade, drop to your practice account. The reps are what's going to make you better. So many of us are like, yeah, I don't want to trade my practice account. I'm going to be wasting all my good trades. They could be in combines or XFAs. Listen, you think that's what a major league pitcher does? No,
Let me go
he's
pitch.
out
Let me go
there
pitch
with
in the
the
World
reps.
Series to
Exact
get rid of the yips. Yeah,
exactly.
nah, that's
I
not how that
mean,
works.
you coach, right?
Yeah,
You
yep.
coach basketball.
Hmm.
So how many hours a week do you try to get your guys either doing drills on their own or running sets with you in the gym?
when I stopped coaching out of high school, but I mean, we would probably run team plays twice a week, and then everything else outside of that was drills. And then I'm like, hey, we have an hour of team practice, which is great, an hour and a half. But then you need to be in the gym by yourself, right? Getting shots up, or just like mentally kind of connecting to the
Exactly.
game. Yeah, we did we and then we do all of that to play maybe 2 hours a week, right? Where we actually have game time. So most of it is
Yeah.
practicing, right? Is like assessing how you're going to act in real time. Um, because if you just throw somebody into a game, just like if you just throw somebody onto a charts, could they hit a shot? Yeah, but can they figure out how they did it and do it again? And that's really what we're trying to get to.
Yeah, for
Can we do
sure.
the same thing repeatedly? And if you don't know how
Over
you
and
got,
over again.
Emery, one of the things I told my VIPs last season is the scariest thing is not knowing where you're winning or losing trades come from, because then you don't know how to
Oh
repeat it,
man,
right?
that's good.
Even with our
That's good.
even with our really good trade setups, right? Like if I have, hey, this is a 80% probability based on my playbook. If I don't know what it looks like when it loses, I'm at the risk of over leveraging because I think that this is 80% and it's going to work every time,
Exactly.
right? We should know what our best trading looks like when it doesn't work, right? For me, if I'm taking a momentum breakout
Hmm.
and it looks really good, if we start to close below VWAP, that's probably part of the 20% where this trade is not going to work out, right? So that's not the time for
Yep.
me to get extremely aggressive. You don't know that until you repeat it over time. So, um,
Yeah,
more practice shots than game.
for sure. Absolutely. Absolutely. And nothing beats being in the game, but you've got to get a feel for price action. And you can do that really easily in a practice account. So resist the urge not to do it and just go, you know what? I'm just going to get the rhythm in.
Yep.
Just learn the stroke and just get the rhythm of it. It's so important in any kind of performance activity. You just got to get the rhythm. Absolutely.
Brendan Cox wants to know how the NASDAQ is looking. We are testing this 23,850 level here. I'm looking at the order book. There's not really much there. I know somebody was saying there was a 300 lot at 23,850 before. We tagged it. Just kind of sitting here.
Yeah, statistically speaking, we should run through the low volume node. My
Yeah.
thought is the potential that it runs into that low volume node. So we'll see. I got room. I got room. But yeah, so that's something to really note. If you break out through an area and you go, "Oh, I don't want my wrist to go any higher." If you look into your volume profile and you see this low volume pocket, it does have a tendency to rush right through it because there's no uh stop points, right? Sort of like going down a rope without any knots, right? You just flush straight through and it leaves that low volume pocket. And when you climb up, you can move that same way because there's not a ton of resistance in the way. So it'll be pretty interesting to see how this one plays out in general. Momentum is lifting for sure. So we shall see. And here's the thing, sometimes trades go well and sometimes trades don't. The question is, have you managed your risk? Are you going to go into meltdown if you have a bad trade? And at the end of a trade that ends up with a negative outcome, before you take the next trade, are you willing to look at your charts, see what you read or misread, and then say to yourself, if I had to do this over again, what would I do differently? And can I count on doing that different thing the next time I see this? Make accountability markers for yourself. Next time I see that, I'm going to do this. And just learn to hold yourself accountable, folks. It is
Go
so
for it.
important.
So important.
It's
And Emery, you know, I've heard you talk on the show about, you know, just like your personality going into trading and when you got into it. I feel like I'm very much the same way, where it's just like that was a hard lesson to learn because like no, I'm not wrong.
Oh,
I'm not
100%.
wrong.
Yeah,
And yeah, I mean,
100%.
I think the market ultimately teaches you that lesson. It's just like, okay, you can
Yeah,
think that you're not wrong all the time, but it's costing you. So what is really
yeah,
right or wrong at the end of the day? So now no one trade would it make your account? Maybe, but it shouldn't break your account, right? Because you
yeah,
accept whatever the
exactly.
risk is, and it definitely took me a while to learn that.
Yeah, same, same. It's just, we traders we're a resilient bunch and we're used to going, I got it. I got it. Right?
Yep,
We don't want anybody going, listen, you're being a dope right here. And so we have to fight that part of ourselves that's really ready to get after it. And the part of us that needs to sit back and go, all right, you need to think this through. Because at the end of the day, it's not about being right or wrong, it's about being close. And so, because there's no exact number, right? A lot of times we go, oh my gosh, you top tick that, way to go. That's just chance. Absolutely, it's just chance. Getting close is really that sweet spot. That's why perfection is the enemy of progress. If you're looking for that excellent, perfect space, it doesn't exist. Too many of us are in there. Too
100%.
many of us are in there trading our own ideas. So, once again, we've come to the end of another fabulous show with the magnificent Coach Jay. Absolutely such a fabulous rock star of a guy and so helpful for the muckety muck over here that cannot seem to get OBS right.
Get it. We'll get it, Emery.
Yes, so
We'll get it.
can't never could is what I say. I'm the little ant that climbs up the rubber tree plant. I'm just still sitting at the bottom of that rubber tree plant. I can't get up there, but I'm getting after it. Any parting words for the lovely viewers?
Yeah. So remember that it is Jackson Hole week. So you know
Oh,
we'll
that's
hear a lot of
right.
headlines and things come out of that. We're not going to hear any policy decisions or anything like that. But financial markets' eyes are going to be on Jackson Hole. Kins FX has a question here. What's a good tip for someone who passed into many funded accounts but never made it to any payouts apart from risk management? Uh, Kins, honestly, it sounds like you're trying to get away from eating your vegetables. Where risk management, how do you get to a payout without managing your risk is the question. My question is, how are you managing that account? Every time somebody says they've gotten into a bunch of funded accounts and never taken a payout, I ask a couple questions. Have you ever had an account that was eligible for a payout and didn't take it? And if so, there's a follow-up question to that. This is like a question tree. If you've had an account that was eligible for a payout and you didn't take it, what was the number in your head that you said, I'm going to get to before I take a payout? That's
Yeah,
monetary focused thinking and it doesn't help with your trade. If I'm
yeah.
thinking about
And
making a dollar amount for every trade, it doesn't work, right? Emery, if you sit down
yeah,
at your desk right now and say, I'm going to make $10,000 from this NASDAQ trade and the market doesn't agree with it, who's upset at the end of
yeah,
the day?
exactly.
So manage your
Yeah,
accounts
exactly.
better.
Exactly. Yeah. The one thing I would say is what I have noticed is that once we get to the XFA, we start trying to rush. We rush. Oh gosh, now I can get a payout. And we rush. And it's just like, and baseball is my favorite sports to watch. And so I'm going to have a lot of baseball references, but you'll notice when a pitcher's getting ready, when he knows he's going to be on the mound, he's out there throwing pitches, warming up. And so when you get to that XFA, use your practice account and go, okay, this is what I really want to do with this setup. Does this setup work time after time after time after time? Here's the thing. Most of us don't trade the same setup over and over and over and over and over again. We feel like doing the same thing somehow it ends up making us crazy, when the fact of the matter is consistency is going to get you to where you're going. So what I've noticed is a lot of traders try to speed up in the XFA, and it's just like Jay said, it's managing that risk. But when you get to the XFA, it's almost a space to go, okay, slow down. Slow
Good quality.
down. Exactly. Quality over quantity. Just slow it down.
I think everything in this space is telling traders to kind of speed up Emery. It's like, oh, how many days can I pass? Let's get this down to 1 day to
Yes.
pass. And then like
Yes.
literally if you read the rules, you can't get paid out faster than 5 days in a Top Step account, right? Once you get to that XFA. But a lot of traders, they're rushing through that process. Some of them passing combines in 24 hours, right? Where they
Yep.
trade it
Yep.
in the morning, Globex opens up, they throw on size and they finish it again. What you're
Yep.
conditioning your brain to do is expect a positive result in a time frame that you're not going to get in an XFA, right? So,
Yep.
it's almost like you're lifting weights in your dreams, right? And I could lift up the whole gym, and then I just try to go and like join a bodybuilding competition because I was able
Love
to
it.
bench press 500 pounds in my dreams. It's like, well,
Yeah.
wake up.
Okay, that's hilarious, but
It's
very apropos. That's a
right.
good example.
So
That's a really
slow
good
down, like Emery
example.
said, and actually put the reps in instead of trying to rush the process.
Yep. No doubt
All I got
about
though.
it. No doubt about it. All right, everybody, thanks for joining us. We appreciate you so much. We've got Coach Dakota coming up, and then we've got Aaron, and Deanna, and then, of course, we probably have our workhorse Coach Jay sometime tomorrow showing up and showing us how it's done. Stay tuned, stay active, but don't, if you find yourself over trading when you're watching Topstep TV, use your practice account. Start being selective and saying, okay, no, 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 this is a good trade. And don't get frustrated. Think about process over results. Process. That's all you care about. Process, process, process. Oh, you know what? I didn't follow my process and I still won, so that really wasn't a great trade. Or I did follow my process and I didn't win. Well, I know my process over time is going to have a positive result, so that's okay too. And try to keep yourself off the emotional roller coaster that so many of us go on tilt. And, you've got to have self control in this business. You have got to have self control. If you don't, it's going to be a rough road for sure. But we'll see you guys later.
See you
You
later.
take care.
Have a good one, Emery.
Thanks so much.